afternoon. If there were any doubts you might have had coming into these meetings this weekend about whether or not we're into an energy revolution, I think those doubts will be dispelled by the time that you leave because of the number of presentations we have on it. The industrial revolution, or the energy revolution that we're going to be seeing is one thing. The ability to control that revolution, the ability to coordinate it, the ability to bring to bear bottom line figures and human dignity considerations, that's something we have barely yet scratched the surface on. And that's what I want to talk about real briefly this afternoon. The coordination's the biggest challenge we're going to face, and we really have only two alternatives. One is we get ahead of that curve and we structure it, or secondly, we get pulled kicking and screaming into this revolution that's going to be occurring anyway. There really are no other alternatives. Those two choices are essentially going to determine whether we get this right or get this wrong. And what I put up here on this first slide about getting things wrong, if you go back into the history of Pennsylvania and what occurred in 19th century coal, there were a lot of industrial advantages from it. There was a lot of human misery from it as well. We run the risk of doing the same sort of thing with the new developments in energy. And that's one of the things that we desperately have to avoid. There are changes coming. Some of them are already here. You read about them all the time. We haven't worked out the implications, but everybody is already posturing over them. These game changers, the unconventional production. You've heard several times already today, we're in the middle of one of them called the Marcellus Shale. Now, to give you some perspective, I do consulting all over the world. In fact, over the last 4 months, I've been on 3 continents. I leave for Frankfurt again on Tuesday. To give you a frightening idea, for example, whenever I go over to Germany to talk about shale gas, the Germans assume that whatever comes out of Harrisburg is going to dictate what shale gas producers do in the rest of the world. Why? Because we're 8 years ahead of them. That's all. That's all you need to be in a business like this. It's light years. Well, we've known about the unconventional production for a while, but we've had no clue about how much energy potential there is. You go back to 2005, and I remember sitting in meetings in which we were discussing how much liquefied natural gas we'd have to import into the United States by 2020. And at that point, of course, everyone was talking to the Cove Point, Maryland facility, Dominion Energy's facility, the largest LNG receiving facility on the East Coast, trying to figure out how we could upgrade that, how we could increase the volume. The figures out there were from 0.3% to 15% of the American economy was going to be built upon LNG we imported from other countries. That's 6 years ago. Today, we're not talking about importing anything. In fact, we're talking about major exporting initiatives because of the unconventional shale gas that we're discovering. We could, without any major effort beyond what currently exists today, increase the amount of natural gas we produce annually by 25% in North America. If we wanted to do that, destroy a market and do a number of other things, but we could do that in terms of all the volume that suddenly has appeared. How do we know these things are changing rapidly? Dominion Energy several weeks ago quietly applied to retrofit half of their facility as an export facility. What are they going to do with it? They're going to take the natural gas coming from the Marcellus, turn it into LNG, and sell it to Europe. Can you do that? Canadians have already told us how. The Canadians are building 3 LNG facilities. One is at Kitimat on the British Columbia coast. I was up there for a meeting a couple of weeks ago. Kitimat is currently under construction. When the Canadians first put this on blueprint, it was to be one of 3 major importing facilities. When it's open 4 years from now, every bit of that facility will be exporting LNG to Asia. That's how quickly these things change. Now, given the importance of Marcellus on the East Coast, Pittsburgh is right in the center of this unconventional changing. And it's not simply shale gas. We've got coal bed methane. We've got tight gas that occupies sandstone lenses. We even have hydrates, rather dangerous, but we have a considerable amount of hydrates, especially off the Alaskan coast. So if all the people talking about climate change are correct, then in a couple of years when we start buying our summer vacation homes up on the northern coast of Alaska, we can start developing those hydrates as well. We've got oil shale. We've got heavy oil. We've got bitumen. All of those traditional sources that we thought essentially were moving by the board, we now understand we have a much greater volume of them. Now that's both an advantage and a disadvantage. The advantage is you have to keep revising the peak oil issue because it doesn't look like we're running out of oil. The disadvantage is, number one, this unconventional costs a great deal more to put online, especially when it comes to unconventional oil, than what it is we're used to. And number two, it doesn't force us to deal with the essential coordination problems, which finally gets me back to what it is I'm discussing today. We need to integrate existing sources of energy with the unconventional coming online. We need to be able to integrate these with the coal and coal gasification, the coal to liquids, the gas to liquids, the new renewables, the alternative energies, developments in nuclear. Nuclear has been taking a pounding recently because of certain events in Japan. At the same time, we've had developments of magnificent new small nuclear batteries that are completely self-encased, that can be used for entire communities, that don't require any maintenance whatsoever, and you merely replace them every 18 to 35 years. And that market was expanding considerably, especially in places in the world where it's just too expensive to build the infrastructure to build in the conventional or to bring in the conventional energy. Those approaches aren't going anywhere. As the Germans decide that they're phasing themselves out of nuclear, we have a ramp up in terms of the nuclear reactor facilities that will be built in China, that will be built in India. This market is moving throughout the world, but the market certainly isn't over. The problem with each of these energies is they're looked at as if they're insular sources. We need to be able to integrate them. If we don't, there's going to be downsides, both in terms of efficiency and also in terms of the impact this is going to have on the lives of average people. The infrastructure needs I talk about here are rather clear. We see this every day. That structure that's necessary to deliver energy, regardless of what the energy source is, requires constant expansion. In the case of pipelines in the United States, upwards to 60% of those pipelines will have to be replaced by the time we get to 2020. They're just simply too old. As the infrastructure gets replaced, it would be nice to upgrade it to something that's more efficient and something that actually gives us a better feel for what's going on. None of that planning is really being done now. The whole planning I mentioned here this is all the planning from the public sector folks setting up the regulations down to the individuals who are actually running the efficiency charts for field management, the people who are actually developing the fields and actually extracting the energy. Risk assessment's already been talked about. Jerry just talked about it. I do a lot of risk assessment. My risk assessment situations, I'm at Duquesne University. I'm the scholar in residence at their Institute for Energy and the Environment. I also run two of my own companies that do international oil and gas consulting on the one hand and global risk management on the other. Now, what we've learned about doing global risk management is nobody knows what it means. But they do know that there's a real big risk problem out there, and if we don't know how to solve it, we have to hire somebody from the outside to do it. Now, everybody knows why. There's a corollary to Murphy's Law. And that corollary says during a time of crisis, an administrator who is smiling has figured out somebody to blame it on. If you hire somebody from the outside and it doesn't work, you've got somebody to blame it on. So we walk in and out of situations all the time. And one of the things I've recognized is that everybody understands risk as a problem, and everybody thinks they know what they do for a living, regardless of what the company is, and they'll do a risk assessment project in terms of how to avoid getting people killed on the shop floor and getting disgruntled customers and so on and so forth, how to get better return from their loans and these sorts of things. But when it comes to what about the risk assessment to your stakeholders? What about the risk assessment to the people in the community as a whole that you're supposed to be serving? They don't have a clue. And you know what they do? They'll give me a number and say, call up our PR department. That's not what we're talking about here. We're not talking about who puts out the press releases when something goes very, very wrong. We're talking about how do you integrate this into a wider need, into a local need, into a community need, into a national need, into an international need. With energy, very little of that's been done, and it's absolutely essential. The coordinating services here run the gamut of everything that's essential in delivering and distributing energy. MLPs and new holding structures are something I'm spending a fair amount of time on these days. You may have heard about it. There are these things called master limited partnerships. Master limited partnerships are the new sweetheart way in which you run pipelines. Oh, you also run midstreams, those people who gather and do the initial processing, provide the storage, provide the terminal capacity, and so on. But essentially, people see this in terms of pipelines. Well, what does this mean? It means that the pipelines themselves are being owned by certain partnerships in which all of the profits move to the partners. There are no corporate taxes whatsoever. If that MLP decides to spin out an equity position from that, in other words, a share issuance, now that percentage of the profits automatically goes to average shareholders as dividends. And we look at some of these companies, and many of these companies I'm tracking are giving annualized dividends between 12 and 20%. It looks really great. Guess what? There's no model for this. There's no way of coordinating for this. There's no way of figuring out how these new holding structures actually impact on the overall delivery of energy. Let's face it, the guys who are developing the MLPs hold the midstream crux in all of this. You got guys here developing the oil and gas. You got people here who use it. The guys in the middle are making a greater amount of money by delivering it from point A to point B, and we don't really have a clue over what the acceptable model ought to be.